Hi, so now we'll be doing the December 2022 examination sums of corporate funding. Now, in corporate funding, they have started to ask a lot of sums, and in this exam in December 2022, they asked sums of 20 marks. Okay, so we'll be solving all of them. It's pretty simple. So just you need a calci and then we'll be solving it in a short time. Now let's see the question first. Okay, they have given you the extract from the balance sheet of YBL Limited as on 31st March 2022. They have given you the current assets and the current liabilities. Okay, current assets, they've given you inventories, fixed assets, financial assets, all of them. Then they've given you bank borrowings, trade payables, and other current liabilities. Now, what are we supposed to do? Let's read. YBL has a bank borrowing of 820 lakhs, which includes bill discounted with the bank. It wishes to avail a loan for its working capital and approaches your bank for financing. While maintaining the minimum current ratio of 1.33, calculate the maximum permissible bank finance as suggested by Tandon Committee. Should the bank sanction the loan request or no? So what are they asking? That your bank, your company has come to this bank for a working capital loan. Now RBI has drafted and given a particular guidelines for banks to decide how much loans to give to companies for their working capital requirements. So Tandon Committee has given this maximum. We follow the Tandon Committee method of maximum permissible bank finance. In this, there are three classes or three methods that have been given by Tandon Committee. Okay. The first method is for blue chip companies, and the formula is very simple. 75% of the working capital gap. Here the current ratio turns out to be 1:1. So we've seen the methods. I'll show you also. So it will come up to like this. In the first method, maximum permissible bank finance. So maximum bank loan, how much they can get for working capital requirement. So it will be 75% of current assets less your current liabilities. Till here it is clear. This is what the Tandon Committee method 1 says. When you apply this method, the ratio, the current ratio, okay, the current ratio comes out to be 1:1. This is normally given for blue chip companies. Okay, so they end up getting more amount of loans. For other companies, okay, for normal companies, the method 2 is followed. In method 2, what happens? Maximum permissible bank finance, you get 0.75 of current assets less your current liabilities. Okay. Here, if you follow this method, you will see that you end up getting a little lesser amount of working capital loan, and the ratio turns out, the minimum current ratio turns out to be 1.33:1. What does it mean? That 1.33 will be the current assets, okay, and that time the current liabilities will be 1. If it's a blue chip company, we don't mind giving how much ever is your current assets, current liabilities, that much current assets loan can be given. Understood till here? So here what is happening is we are ensuring that minimum 1:1 you maintain, it is fine. Here in the second method they are saying no, current assets should be 1.33 and current liabilities can be 1. So you have to keep a little more current assets. When the third method is there, it is for loss making companies, sick companies, where we say that it will be 0.75 of your current assets less your core current liabilities minus your current liabilities. When you do this, the ratio works out to 1:5:1. That means we are saying that a liability, when it is 1, current assets has to be 1.5. Clear till here? So when we read the sum, what ratio they are saying should be maintained? what ratio they are saying in the sum is to be maintained? If you see here, they have said that the ratio should be minimum 1.33. Therefore, method 2, indirectly they are telling you follow method 2. Now, method 2 is very simple. You require maximum permissible bank finance will be 0.75 of current assets. So these are all your current assets given, right? You will add them up, okay? So your inventories, your investments, trade receivables, cash, bank balance other than the above, and financial assets. So all of these are current assets. You will add it, take a 75% of this minus the current liabilities. Now in current liabilities, you will have to exclude the bank borrowings. You exclude the bank borrowings which have already been taken. So we will come to know it's how much? 380. Okay. Why are we excluding the bank borrowings? Because we are actually finding how much bank borrowing should be given to them. Okay. So this will give us the maximum permissible bank borrowing. And then from that we will subtract this to know how much can be given more. So further, if I go and see this calculation, the calculation of the maximum permissible bank finance minimum current ratio is 1.33 means the second method should be followed. Now when we follow this minus the current liabilities excluding the bank borrowing. So we come to know the maximum permissible bank finance is 75% of the total current assets less your current liabilities excluding bank borrowings. Then you come to know it is 820 lakhs is the maximum permissible bank loan that they can get. Concept clear till here?
Sir.
Yes. You asking a question?
Yes, sir.
Yes.
Sir, do we add investments as well?
Yes, you add every single thing. See.
Even investments?
Yes. So here they have already given you, these are current assets. So they have given you a list of current assets only. It is not the balance sheet that they have given. So they are already telling that these are your current assets.
Okay, sir.
Okay. So these are not fixed assets that they have given. Financial assets. Okay. Since they have already said that these are current assets, we will take them. Okay. Now, so the maximum permissible loan as per method 2 is 820 lakhs. Now you will use the bank borrowings. Now you will check the bank borrowings that listen, the maximum amount they can get is 820. Out of this they have already taken how much? So max they can get 820 lakhs. So I can put it in this way, the maximum permissible bank borrowing less your existing loans. Existing loan is equal to the eligible loan amount. Yes or no?
Yes, sir.
No. So maximum permissible bank finance is 820 minus, now I will use this figure which I had earlier skipped. That is your bank borrowing. So we will see how much is the bank borrowing. Bank borrowing is actually 820 lakhs. So are they eligible for more loans? So already they have 820 lakhs. So eligible for more loans is 0. Since they have already availed a maximum permissible bank finance, hence they have reached the current minimum current ratio of 1.33:1 by borrowing this. The bank manager could not sanction the loan request of the company. Concept perfectly clear. So remember, for the first one the ratio is 1:1, first method. Second ratio is 1.33:1 and third ratio is 1.5:1. So sometimes if they don't tell you directly which method, they might give you the ratio. Okay, just the minimum ratio is to be maintained, and then you will apply the formula. That's it. Now coming to the next question. The next question is the projected financial information of Bunny Wala is given below. Projected annual sales is this much. The net profits on sales is this much percentage. The average credit period allowed to the debtors is this much. The average period allowed to the creditors is this much. average stock holding in terms of sales requirement is 8 weeks. On the basis of the above information, calculate the current ratio and the working capital. Now, very simple, the current ratio formula. Current ratio is very simple. You can note down the formula: current assets upon current liabilities. Simple, yes or no? And working capital formula is also very simple. Your working capital is equal to current assets less your current liabilities. Clear till here? Now, from these figures, now current assets are your stock, debtors, cash. Stock, debtors, cash. I will add them up and I'll get my current assets. Current liabilities could be creditors, could be outstanding payments, etc. Okay, banks pay bills payable. So now let's see how will we do. So current ratio. Here the debtors credit period is given, the creditors period has been given, okay, and the stock period has been given. From here I get the sales amount and I get the net profit. I can find out the net profit, yes or no? 25% of this amount is how much? So sales minus net profit. So sales is how much? 6,50,000 minus 25% of this is how much? 25% of this 1,62,500 minus 6,50,000 is equal to 4,87,500. This will be your cost of goods sold. Yes or no? Simple. Sales minus profit is cost. Sales minus profit is your cost. So I came to know my cost of goods sold. Right? Now remember this thing that when we calculate, always when they have given you your the collection period, debtors collection period has been given. How much? How many days? They've given in the weeks form. So debtors is 10 weeks, creditors is 8 weeks. Okay. So here you have your debtors is 10 weeks, creditors is 8 weeks. Average debtors we need to find. Sales has been given and cost of goods sold has been given. So you'll get your finished goods also. So let's see, we'll work it out. First, here we got the sales, the net profit and the cost of goods sold. Yes or no?
Yes.
Yes. Now we will find the current assets and the current liabilities. Extremely simple. Current assets is your stock, debtors, cash. Debtors has been given. Debtors we have to find. Now debtors is always calculated on sales. Yes or no?
Yes.
Yeah. So your sales amount is 6,25,000. Am I right? 6,50,000. Okay. So sales is 6,50,000. Now this is for the full year. We want to know for 10 weeks is how much, right? So 10 upon 52. So here you have your sales into your debtors collection period divided by 52 of the entire year. We will come to know that this amount is debtors amount for 10 weeks, which normally gets blocked. Concept clear? So debtors we will come to know that for the full year the sales amount is 6,50,000. Debtors are blocked for 10 weeks. So what is that amount? This is for 52 weeks. For 10 weeks, how much? So you'll get this amount. Similarly, when we do for stock, I told you current assets are your stock, debtors, cash. So here they have given you your stock. Stock is always calculated on cost of goods sold. Yes or no? Debtors are on sales. Stock, the goods, are on the cost of the product. So again, I will say what is the cost of the product? 4,87,500 is the cost of goods sold. This is for the full year. Stock is blocked for how much time period? 8 upon 52. So you will get this amount, 75,000. So you add them up, you will come to know your current assets are 2 lakhs. Clear till here? Now we will see current liabilities. Now current liabilities are your bills payable, your creditors, outstanding payments. Here they have given you your creditors. Now creditors are also on what? Creditors gives on what? Cost. Okay. So again 4,87,500 because I purchased from them the cost of the goods, right? So the creditors are always on cost. So this is for the full year. Credit period is only for 4 weeks. So I want to know for 4 weeks upon 52. I will come to know for 4 weeks it is how much? The amount. So amount blocked in creditors is 37,000. Now when we have to compute your working capital. We do your current assets less your current liabilities. Yes or no? So current assets is your 2 lakhs and current liabilities is 37,500. The amount comes up to 1,62,500. And if I want to find the current ratio, it will be nothing but current assets upon your current liabilities. Concept clear? When you do this, you will get 5.33:1. Okay. So very simple. What did we do? We made our working capital statement. In our working capital statement, we wrote what are your current assets. So we'll have stock, debtors, cash, etc. less your current liabilities. There you will write your creditors, etc. and then you'll write your working capital requirement is equal to your current assets less your current liabilities. Concept perfectly clear?
Yes, sir.
Yeah. And always remember, debtors are on sales. So you will find out from the sales amount, you will come to know what is the debtors time period, credit period that we give them. So you will come to know the debtors amount. Similarly for stock is always on cost of goods sold. So the stock and even creditors are on cost of goods sold. So you will come to know that the stock value for the entire year is this much. Normally the blocking period is this much. So you will find only for that block amount period. Is this perfectly clear?
Yes, sir.
Okay. Now going to the next one. That is there is a proposal with the board of directors of Sun Limited to give a loan of 250 lakhs to Moon Limited. Following are the extracts of the financial statement of Sun Limited. The board of directors of Sun Limited seeks your advice to give the loan limit under section 186. So what is section 186 of Companies Act? Loans and investments. And it starts with saying that no company shall give any loan, make investments or give guarantee above a certain limit. Yes or no?
Yes, sir.
And if they want to give above that limit, they have to take a special resolution. That's the simple law. That the board of directors, no company shall go beyond that limit which is given in section 186. And if they want to do, they will have to take a special resolution. Based on your calculation, can the company give loan of 250 lakhs to Moon Limited? So it wants to give a loan to another. If the limit exceeded, what option is available to Sun Limited? If the limit is exceeded, obviously they will take a special resolution. Now let's see the limit amount. First, before we see this entire balance sheet, we will have to first understand what is section 186. So 186 is pretty simple and they have asked the exam question on this. So let's read it properly now. Section 186, subsection 2 gives you the limit. It says no company shall directly or indirectly give a loan, give a guarantee, or acquire any shares, that is, purchase any securities of any other body corporate. So can I say no company shall give any loan, guarantee, or purchase any securities of any other company in excess of what is the amount? 60% of paid up capital plus free reserves plus security premium account. Or they've given you 60% of paid up capital plus free reserves plus security premium, or 100% of its free reserves plus security premium, or 100% of the free reserves plus security premium account. So we will have to do these two calculations, yes or no? And the limit is in excess of these two, whichever is more. So higher of the two amounts I will know is the maximum limit they can give a loan, guarantee, or security. So now we will compute. We require three important figures: paid up capital, free reserve, security premium, right? So let's see. From here, can I say that the paid up capital is already given? Security premium account is already given, amount in lakhs, yes or no? I require paid up capital, free reserves, and security premium. Nothing else I require. Free reserves. So reserves I will get in the liability section. General reserve will be calculated. Retained earnings will be calculated. Will revaluation reserve be taken?
No, sir.
No. So these two are your free reserves. Your revaluation reserve, if you know the entire concept of revaluation, where I just revalue my assets, in reality I have not got any profit. Okay, it is just a calculation that I have done, but in real there is no gain. So that is not to be considered as a free reserves. Free reserves are those amounts which is available for distribution as dividend. Okay, so this we will take, that will be 175, 250 and 200. These figures we will take. So when we do that calculation, you will get 60% of paid up capital, you will get 375, 100% of free reserves and security premium, and higher of the two amounts is 375. Clear till here?
Yes, sir.
Yeah, so if we just take and do this, it will be 60% of paid up capital plus security premium plus free reserves. How much does it come up to? So 625 is your 60% of 625. You get your answer as 375. Okay, or so this is one thing, you get your answer as 375, or 100% of free reserves plus security premium. So 100% of security premium, 200 plus 175. So here also you get the answer as 375. So both the amounts, whichever is higher, so both are equal only. So the final figure will be 375 lakhs. So can this company give a loan, guarantee or security, invest in another security in excess of this amount? Yes or no? Quickly. So general answer is no. If they want to exceed this limit, then they will have to call a special, take a special resolution. Now let's see what is the question that they have asked us. We got the limits, but what is the question? Based on your calculation, can the company give a loan of 250 lakhs to Moon Limited? So limit is how much?
375.
375. Can they give a loan? They want to give a loan of 250 lakhs. Can they give? Yes or no?
Yes, sir. But they have already given one.
Very good. So this is the overall limit. This is the overall or maximum limit. From here, because students can make a mistake, that they can quickly go that they just want to give to, but already they have given. So I will have to calculate what is the existing amount. This is the total maximum that they can do. From here we will see. So if we go to see how much they have done, so what I'll have to see, the three things: loans, guarantees, and investment in securities. So this is investment in equity will be counted because it's an investment in securities. Securities, so even bonds and debentures will also come. Government securities will also come. Loans to others will also come. Intercorporate deposits, so it's also a loan. Guarantees, that is also covered. So all of this we will add up. So how much do we get when we add up? 50 plus 15 plus 25 plus 40 plus 120 plus 20. So 270. Yes or no?
Yes, sir.
So they have already given off 270. So from here they have already given off 270 lakhs already given. So how much is available to them? $105. So if the company wants, the maximum that is available now is 105 lakhs. However, if they still want to give beyond 250 beyond this limit, then they can pass a special resolution. Concept clear till here?
Yes, sir.
So that's what they've given, that as per the balance sheet, loans, see all the three they have given. Loans, investment and guarantees, when we calculated it came to 270 lakhs. Already have provided all this. Therefore, they cannot give additional 250 lakhs. Okay. Because then they are saying that it would go up to 270 plus 250 and it would be 520 lakhs that they would have amount of loans. Hence, however, Sun Limited can seek prior approval by way of special resolution. Concept clear?
Yes, sir.
Yeah. Now we'll go to the third, the next one, that is of commercial paper. Okay. What are commercial papers? Commercial papers are promissory notes issued by good credit rated companies to meet their short-term requirement. So if they have a short-term loan, they will, a good credit rated company like Tata's, if they want to raise, they can issue a commercial paper and do this. One of the interesting feature of commercial paper is that it is issued at discount. It is issued at discount and what will it be? Redeemed at par. Clear? So the feature is we will issue, even though the face value is 1 lakh, we will issue it to you at 96,000 and we will redeem it at the face value, that is 1 lakh. So the differential will be your gain. That is the concept of commercial paper. Have you understood? Issued at discount and redeemed at par, and the balance will be the gain to investor. Now let's see what they are saying with respect to commercial paper. A company issued commercial paper having a face value of 5 lakh rupees for 90 days maturity. Now again, we'll have to see commercial papers can be issued for different days and different tenures. So this commercial paper is issued issued for 90 days maturity. Face value is given. So we have the face value as 5 lakhs and the tenure is 90 days and at a rate of 10% of the issue price. Okay. So what is 10% of? Normally interest is given on face value or issue price?
Yes, sir.
Normally when we do it is always on face value. Here they are saying it is issued on issue price. So let's see how we will do. We'll have to apply some of our mind, and the issue price calculate its issue price assuming 365 days in a year. So we have to calculate the issue price. Now, from what I told you, can I say that issue price is equal to, okay, issue price is equal to the face value minus the interest that he will get, the gain that he will get. As I told you, it is issued at discount and redeemed at par. So the gain minus the face value will give me the issue price. Yes or no?
Yes, sir.
Yeah. So face value we know is 5 lakhs. I will calculate the interest that he is getting. Okay. At the rate 10% on issue price. We will see how we do it. We'll get the interest amount. Once we subtract the interest amount from here, we know that it will be the issue price. Concept clear?
Yes, sir.
So let's see how we will do it. It's very, very simple. You'll take the issue price to be X. You'll take the issue price, let the issue price be X. Now face value less the interest amount will be your issue price, because face value less the gain will be the issue price. So we are keeping the issue price as X. Face value is 5 lakhs. Here we are keeping 10% on the issue price. Yes or no? If we have to calculate, it's 10% of the issue price into 90 divided by 365, because we want for the tenure for 90 days only. So what we will do is, the issue price is equal to face value minus the interest amount. Now the issue price I don't know, I'll keep it as X. Face value I know it is 5 lakh rupees, whereas interest amount is how much? It is X into 10% of this. Yes or no? Now this entire thing into the into 90 upon 365 days, right? So now if we do the calculation, how much do you get? 90 divided by 365 into 10%. How much do you get?
0.02465.
Correct. So is equal to 5 lakhs minus a very weird figure, that is 0.02467x. Yes or no?
Yes, sir.
Now we will take, this is minus this side, so it will go and become plus. Okay, so this is 1, so it will become 1.02467x. So this is 1x, right? 1x plus 0.2 will give me this x, because this is minus, it will go there on the equal to side. We added is equal to rupees 5 lakhs. So therefore X, that is the issue price, is equal to 5 lakhs divided by 1.02467, this, okay, 24657. How much do you get?
4,87,968.
Okay, so you get 4,87,968. So let's see if the calculation is wrong, or you'll have to do it again. Did you get this amount?
Yes.
Okay, so then we are done. So this will be this into. So this is it. All the questions of December 2022 we have completely done it. Super simple. Just need to apply your mind. You do more practice, the more sums you will be able to attempt. So that is it. We are done with the session.